Three of the five biggest banks on Wall Street made Bitcoin moves in the same week. Morgan Stanley, BlackRock, Goldman.
Goldman filed a product that sells Bitcoin's upside and keeps the premium. That's not adoption, that's a toll booth.
A toll booth on the highway too?
To their quarterly earnings, yes?
Two idiots talking crypto.
Okay. I need everyone to understand what just happened. Three of the five largest financial institutions in America, not crypto companies, not DeFi protocols, Wall Street, moved on Bitcoin in 1 week.
I'm aware. I can read a calendar.
Morgan Stanley didn't just file. They launched MSBT 34 million in day one volume. That's not a press release, that's product on the shelf.
34 million. BlackRock pulled in $1 billion in the same period. Morgan Stanley's first day is a rounding error on BlackRock's Tuesday.
It's not about the...
It's always about the number.
It's about the signal. Morgan Stanley was telling crypto to use a separate email address 3 years ago. Now they're launching an ETF. 3 years from we don't want this in the building to here's a ticker symbol. You don't see what's happening here?
I see what's happening. 3 banks realize they can charge management fees on an asset they don't have to manage. Bitcoin sits in cold storage. They charge 50 basis points. It's the best business model since charging people to hold their own money, which is also banking.
So your bear case is that banking is profitable? Bold take? You're describing why this is bullish and you don't even know it.
I'm describing why Goldman Sachs filed an application for a Bitcoin income ETF. Do you understand what a covered call ETF does?
Generates income.
Sells Bitcoin's upside. The one reason people own Bitcoin, the asymmetric upside, and Goldman's product literally sells it to someone else and calls the premium income. The client keeps the disappointment. Goldman keeps the premium.
That's a dark way to describe a financial product.
I'm describing it accurately. That's what makes it dark.
But you're missing the pool. Pension funds, conservative allocators, income-focused investors who would never touch spot Bitcoin. Goldman just built them a door.
A door to a product that underperforms Bitcoin in a bull market and loses money in a bear market. The only scenario where it works is range-bound, which is the one thing Bitcoin never does.
So Bitcoin is too volatile for your taste and too volatile for Goldman's product. You and Goldman have the same problem.
We do not have the same problem. Goldman's problem makes them money.
Doesn't matter. More product, more access, more flows. The ETF arms race isn't about any single product. It's about the fact that Wall Street is competing over Bitcoin like it's
a fee-generating vehicle?
Like it's the future.
Speaking of flows, April 13th, U.S. spot Bitcoin ETFs recorded $291 million in outflows. While the price was climbing above 74K Zakas, someone is selling into strength.
One day, you're citing 1 day of outflows against a week where BlackRock alone pulled in $1 billion.
I'm citing distribution. When the price goes up and institutional money goes out, that's not accumulation. That's exit liquidity being manufactured. And you, the retail viewer watching 3 bank logos and thinking adoption, you are the liquidity.
That's a little dramatic.
I'm understating it. The dramatic version involves a puppet show.
BTC went from 67.3 to above 76K in a week. 9.7% while shorts got obliterated. 500 million in liquidations, 64% short. The bears funded this rally. Literally, funding rate is negative. Shorts are paying to stay in a losing trade.
Funding rate at negative 0.005% on Binance. From a fundamentals perspective, a negative funding rate means the market is still positioned short against a rising price. That's a coiled spring, not confirmation of a trend.
Did you just call it a coiled spring? That's my metaphor. You're borrowing optimism and pretending it's caution. That's exactly what I'm saying. Fear and greed at 21. 8 consecutive days of extreme fear. Bottomed at 11, now 21. And the price is ripping. When bad sentiment can't keep the price down, the line of least resistance is up.
Or when the index says fear and the price says rally, one of them is wrong. Guess which one corrects?
The index, every time.
Or the line of least resistance is a dead cat bounce before macro reality catches up. Fed funds at 3.64%, 10-year at 4.31%, dollar index at 118, CPI at 3.29, oil above $114 a barrel. These are not conditions that produce sustained risk on rallies. Uncorrelated asset is something people say in bull markets and quietly forget about in bear markets.
You just listed 5 numbers like you're reading a weather report for pessimists.
The forecast is overcast with a chance of reality.
You know what else happened this week? Kevin Warsh, the Fed chair nominee, disclosed crypto and polymarket investments. Even the Fed chair owns crypto. That's a one-sentence story that converts skeptics.
A Fed chair with undisclosed crypto holdings making monetary policy that affects crypto. That's not adoption, that's a structural governance problem people are celebrating because the number went up.
5 stories, 1 week, all pointing the same direction. This is a narrative constellation. Every story amplifies every other story. Morgan Stanley launches, BlackRock pulls $1 billion, Goldman files a new category, shorts get wiped, and the next Fed chair is one of us.
One of us. He filed a disclosure form. You're acting like he's posting Wojaks on crypto Twitter.
The susceptible pool of TradFi allocators is massive and barely tapped. We're in the second inning.
You've been in the second inning since 2017.
All right, I'm making a call. BTC reclaims and holds $85,000 by May 15th. Institutional momentum plus short squeeze plus fear reversal. 30 days. Market.
Noted. Mine, net US spot Bitcoin ETF flows turn negative for at least 2 of the next 6 calendar weeks by May 27th. Demand pool saturation. Goldman cannibalizing directional demand. Macro headwinds. The excitement is peaking and the product shelf is getting crowded.
So you think Wall Street is going to launch all these products and nobody's going to buy them?
I think Wall Street is going to charge fees on them regardless.
Touché! Oh, ETH? I had a prediction from last episode. ETH to $2,500.
You missed the date.
Nailed the direction. $2,338, $162 away, plus 12.5% on the week, outperforming Bitcoin.
I was wrong about when, but right about what, and close to right about how much. That's not a prediction. That's a participation trophy.
It's a percentage play.
There it is.
Speaking of percentages, a lot happened this week besides the ETF circus.
Oh, good. More things for you to be wrong about.
Let's start with the carnage. Long-short ratio, 42.6% long, 57.4% short. Majority of the market was short against a rising price. 29.4 million in tracked liquidations, 64% short. But the real number? North of 500 million.
And yet the majority is still positioned short, which means either they're right and you're early to celebrate, or they're wrong and there's more fuel left. Pick one.
I pick fuel, obviously.
Aave V3 TVL 25.7 billion, up 8% on the week, 1.6 million in daily fees. This is what actual revenue looks like.
DeFi doing DeFi things. Wake me when it trends on CoinGecko.
It doesn't need to trend, it just needs to earn novel concept.
You know Aave is up 12% on the week too, right? That's a trend on a chart that goes up.
I'm aware of which direction up is, I'm just not basing my retirement on it.
Tether. 16 million in daily fees, that's not a stablecoin, that's a central bank with a website.
Run by people who've never passed an audit. But yes, impressive margins on other people's money. The Federal Reserve makes less per dollar held, and they have a building.
Tether has a building. It's just nobody knows where it is.
Deutsche Börse moved to tokenized assets. Europe's largest exchange operator, quiet, no fanfare, just infrastructure.
I love when TAC gets excited about boring things.
Infrastructure is the exciting thing. You just can't put it in a thumbnail.
Genius Act stablecoin regulation moving through committee, first real legislative framework.
Moving through committee is not passing into law. Moving through committee is where legislation goes to be rewritten 17 times and then forgotten, but it's further than anything else has gotten. From a fundamentals perspective, regulatory clarity would be the most bullish thing in crypto since the Genesis block. so naturally it will take 4 more years. Welcome to the autopsy table. This week's patient, Bittensor, specifically Covenant AI, a subnet validator, publicly exited the network calling it, and I'm quoting, decentralization theater. Tao dropped 15%.
One validator, out of hundreds. Tao is number 4 trending on CoinGecko. That's anti-fragile. Bad news absorbed. Community rallying.
Anti-fragile. I was wondering when that would show up. Let me walk through the autopsy. Red flag 1. Revenue model opacity. Bittensor's primary revenue is Tao emissions. That's inflation dressed as yield. When your income comes from printing more of your own token, your revenue model is a circle.
That's the incentive structure. That's how you bootstrap.
Flag 2. The trending paradox. Number 4 trending while insiders leave. When the people closest to a project are leaving while the people furthest away are buying, that's not a signal, that's a symptom.
One validator leaving is not insiders leaving. That's like saying someone left your restaurant and calling it a health code violation.
Depends what they said on the way out, and Covenant said decentralization theater. Which brings me to red flag 3. Governance concentration. Decentralized with a narrow decision-making group. Covenant's specific complaint was that the direction of the network was controlled by a small group while the token distribution gave the appearance of decentralization. Appearance, not reality.
Every project has a core team. Bitcoin has miners. Ethereum has Vitalik. This is how things get built.
There's a difference between has a core team and calls itself decentralized while a core team makes all the decisions. One is honest, the other is branding. Red flag 4. The Theranos parallel. When insiders who have the least to gain from speaking up are telling you something is wrong, and outsiders who have the most to gain from believing are telling you everything is fine. I've read this book before. It was called Bad Blood, and the ending was not anti-fragile.
Did you just compare a decentralized AI network to Elizabeth Holmes?
I compared the information asymmetry. The technology is irrelevant to the governance failure, but sure, call it anti-fragile. That worked great for your Luna position too.
Low blow.
I have 3 questions for the audience. For any project that calls itself decentralized, who makes decisions, who earns rewards, and who can leave and who can't?
Fine. Those are fair questions. I still think the tech is real.
The tech is always real. The question is whether the governance deserves the tech.
Comments section, what are our loyal viewers saying?
Nothing. Nobody said anything. Episode 1 hasn't aired yet.
Right?
So this is me, looking directly into the camera. If you have an opinion on the ETF arms race, or on whether TIC's 85K prediction is delusional,
Calculated.
leave a comment. We will read them. I will read them specifically to find evidence of TIC being wrong.
And I'll read them for proof that TAC is scared of being right. Drop a comment, Team TIC or Team TAC. We'll react next episode.
Subscribing helps too, apparently.
Apparently, you sound like my landlord when I told him we had a YouTube channel.
What did Mr. Chen say?
Can you pay rent with YouTube? I said not yet.
The Optimist.
That's the show. Leave your predictions in the comments. Are you Team TIC, 85K by May 15th? Or Team TAC, ETF flows going negative?
Subscribe, hit the bell. We're back next Tuesday.
And one last thing.
Idiots talking crypto. 2 idiots talking about crypto. The TICTAC show. Subscribe and leave a like, you know. Ding that bell for more wild guesses. 2 idiots talking crypto. The TICTAC show. Don't forget to hit subscribe, a like, and that bell. Let's thrive for more market madness every time. We're just 2 idiots talking crypto. Yeah, that's the TICTAC show. So smash that subscribe button. Give us a thumbs up for good fun. And ring the bell, don't miss a thing. Yeehaw!